The increase that you've seen in the gold price in the absence of any retail buying in Western Europe and North America is testimony to the fact that global central banks, reacting to the weaponization of the US dollar and not trusting each other on Monday to fulfill their obligations on Tuesday, are seeing that they have no alternative but to increase their gold holdings, both as a store of value and as a medium of exchange.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for March 11th through March 18th, 2024, while supplies last. First, we feature 90% junk silver mixed dimes and quarters at just $1.99 over spot. We also have AU pre-1933 Gold Liberty at $65 over a 1-ounce spot. And finally, we're offering our choice 1-ounce Palladium bars at just $119 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're always glad to have this returning guest who's widely followed. Rick Rule, formerly the CEO of Sprott Asset Management, now the CEO of Rule Investment Media, joins us this Wednesday, March 13th, 2024. Rick, thanks for coming back on Liberty and Finance.
Always a pleasure. Thank you for having me back.
I and our viewers are eager to have you on each month because you give us the benefit of your long career in analyzing natural resource investment companies and give us insights into what's going on in that space. A lot of our viewers are concerned about debts and deficits, as are you, taxes, as are you, government intrusion, as are you. And that's why your message tends to resonate with us. If we could start on that foot of debts and deficits. In fact, we have a viewer's question I wanted to get to. Let me just bring it up here. And that is, do you see any problem in the new statistic that has been announced that we are now tacking on a new trillion to the U.S. debt every 100 days? That'll be 3 cycles in a row coming up real soon. So tell us what you think that people should be watching and what they should be doing in the face of that.
I would ask our president and our Congress how you add a column of negative numbers and come up with a positive sum. This can't be done. I think that voters are confusing 2 words in English. One called liquidity and the other called solvency. I'm, of course, nervous about the fact that the on-balance sheet liabilities of the U.S. are increasing at a rate of over $3 trillion a year. On top of the fact that existing on-balance sheet liabilities exceed 34 trillion or 27 trillion net. It's interesting that when we use the phrase a trillion, it isn't an accessible number to most people. Their eyes glaze over. It's incomprehensible. And as a consequence of that, they don't know what to make of it. And as a consequence of that, they don't seem to get scared. What bothers me more, Dunnigan, are the off-balance sheet liabilities, the net present value of entitlements, social care, Social Security, Medicare, Medicaid. In other words, me, 71-year-old people who, with the exception of me, are beginning to consume more than they produce. The combined liabilities of off-balance sheet and on-balance sheet are estimated by the Congressional Budget Office to exceed $150 trillion. Now, there's only 2 ways out of this. You can cut benefits really, really, really aggressively. 3 ways, really. You can renounce your debts, or you can devalue the currency through inflation. My bet is some combination of the 3, but focused on the 3rd. All of those are unpleasant. And by the way, despite all this, I'm not a bear. I'm long-term, as you know, an extremely optimistic person. But getting from here to the future, I think there's a couple reckonings, a couple resets. And to the extent that your viewers express concern about that, it's because they did okay in arithmetic in school. Anybody who did okay in arithmetic is going to have a very difficult time reconciling the net present value of liabilities at $150 trillion being serviced by a budget that's in deficit $3 trillion a year. It doesn't work.
I'll touch on a couple points there that you mentioned. One was about off-budget sheet liabilities, such as Social Security. There's a couple things that bother me about Social Security. One is that a whole bunch of things. The worst, in my view, is that it's been basically a lie all along. It was the nanny state saying, we don't trust you to do what you should do for your own retirement or your financial future, so we're going to do it for you. So we're going to force you. We're going to take the money away from you before you even get it, and we'll handle it for you. But then actually, it was pillaged out the back door. It was really just a tax, and it never kept up with what people could have done on their own, probably. Secondly, is that that pillaging happened, that the funds were not protected and really kept for people in their future. Thirdly, that because of the devaluation of the currency, which is part of what you're talking about, the debasement of the currency, the stated benefit or whatever is becoming certainly not meaningless, but almost unlivable for most people. And then when you go to supplement that by continuing to not retire but work on the side, those earnings above a meager threshold then reduce your benefits, that sort of thing. And also that the cost of living adjustments that are made to the Social Security are based on fictitious inflation numbers, which understate inflation. So it just seems like it's being lied to in three dimensions over and over again through that whole process. But even if you look at the statement they send me out annually for Social Security benefits, says, hey, you haven't started taking your Social Security yet. Are you going to take it? It says on page 2, Social Security will be here for you when you need it. And they're calming you down. We're here for you and it'll be here in the future. And yet they say by the year 2030, they're going to be having to prorate or reduce even the nominal payouts to like 70% or something like that in order to prevent just flat out insolvency. So your comments on any aspect of that?
Well, you forgot one more lie, which is demographics. When Social Security was instituted, it maintains you at effectively poverty level at age 65, and the median life expectancy of an American male was 66 years. And the working age population in the United States as a percentage of the total population was much greater than it is today. Now you have the aging baby boomers who are coming out of contributing and coming into consuming at the same time that the minimum Social Security age is 62 or in some cases 59 and a half. And the average life expectancy of an American male has gone from 65 years to 82 years. The actuarial assumptions are still based on median lifespan of 66 years. When in fact it's 82 years, and they don't take into account the changing demographics of the contributor community. Suffice it to say, listen, I used to run or help run a public company called Sprott. If we tried to issue securities the same way that they try to sell Social Security to Americans, and we maintained a balance sheet and an income statement the way they do, I would be in prison. And people seem strangely unconcerned about this. People also, when this interview is posted, there will be hostility among the people discussing this because they will say, I paid into Social Security and I deserve my benefit. No, you have had your contributions stolen for 40 years. And you have voted for the thief. Whether you voted Democrat or whether you voted Republican, you have voted for the thief. And the money that went into the Social Security Trust Fund was never invested. It was spent. It's the financial equivalent of you borrowing from your IRA to go drinking on Friday night. Yes, you have an IOU from yourself to the IRA, but you have no way to fund it. So for the people who have, as a consequence of their own actions, not prepared themselves for the fraud that they voted for 40 years, I can genuinely say I'm sorry. But the fact that you paid into it and the money was stolen doesn't detract from the reality that this is now a transfer payment from young people who are working to old people who are consuming. The fact is, Dunnigan, that my generation voted themselves all kinds of cool benefits and forgot to pay for them. And now the chickens come home to roost.
It seems to be one of many examples of government promises that were, in fact, lies all along. We heard the same thing about the Affordable Care Act, that it was going to be, you can keep your doctor, you can keep your plan, you can keep your whatever, it'll be affordable and everything. And then by the time it got to the Supreme Court, the Obama administration's attorney said, well, after all, it was just a tax. And the judge agreed to it, and they changed the definition. So it's like when you pushed into a corner, the truth sort of comes out. But I guess that's another lesson learned, that basically always assume that anything coming out of Washington means exactly the opposite of what it's named, for one thing.
And a harder lesson for our audience is that the problem isn't confined to Obama. The Republicans have been equally objectionable with regard to the public purse. Mr. Trump wouldn't dare alienating elderly voters. He has said that Social Security must be maintained and perhaps increased. Might he enlighten us as to what he proposes to use for money?
Related question here, because a part of this is the debasement of the currency. Part of that's related to interest rates and the currency supply. We have a question. When Jerome Powell lowers the federal interest rate, won't that help the average person that is in debt, or will it hurt them due to the increase in prices of goods due to inflation?
Depending on individual circumstance, mix knocks. For me, if they lower the interest rate, because I have access to credit and I'm a relatively good investor, it'll be a subsidy to me. You lower my cost of capital. I will use the capital to buy income streams that are increasing while the net present value of my obligation declines. For most people who are savers rather than investors, lowering the interest rate means that the capitalized value of their distributions, of their savings, goes down. So artificially low interest rates are a net benefit to old, fat, rich guys like me, and the cost is borne by middle America. Middle America believes that because their car payment goes down, that they're better off, not understanding that the negative yield on their savings provides a disincentive to save and negatively impacts their retirement, particularly when Social Security threatens to go to Social Security heaven.
It won't be anything like heaven. Okay. Now there's a bigger picture here. You mentioned the demographic picture. We talked about inflationary theft. We talked about taxation theft. There's also an East-West. You can't even call it that anymore. It's the U.S. and Western Europe versus the rest of the world in terms of financial futures and directions that are being taken. The BRICS Plus seeming to be making plans to opt out ever so much more so of the U.S. dollar and dependency on the Western financial edifice to conduct their daily business. We have a question here. If money flows out of the U.S. dollar and failing financial system, wouldn't that drive up hard assets such as precious metals and land/property?
Land/property, maybe, to the extent that money flows out of the U.S. market and makes credit less available, given that the real estate market is so credit dependent. You might not find the same response to real estate that you've seen in prior markets. I'm not saying you will or you won't. I disagree with the thesis that I do agree that the U.S. dollar is becoming a less important trade mechanism than it was, but its former market share was 100%. And while we are doing our very best as a country to wreck our currency, we're thus far unsuccessful. Because as idiotic as we seem to be smarter than the foreigners. It is true that the Russians and the Saudis and the Persians and the Chinese and the Brazilians and the South Africans and all of these people are tired of being lectured by the morons in Washington. It is also true that the weaponization of the U.S. dollar has meant that increasingly people whose policies are at odds to American policies want to find exchange mechanisms outside the U.S. dollar. My experience has been doing business internationally for 40 years. As much as they distrust us, they trust us more than they trust each other. And I would suspect that fears of, as an example, the BRICS currency eclipsing the U.S. currency in my lifetime, I'm a very healthy 71-year-old, are very, very, very overblown. The liquidity and the transparency and the depth of the U.S. dollar debt market is so deep that my suspicion is whether other people like it or not, they're going to use it. Will the Russians occasionally settle an oil and gas sale in Chinese renminbi? Yes, to the extent that they could turn around and spend that renminbi. Will the Russians acquire substantial amounts of renminbi denominated debt? Or more importantly, will the Chinese add on very many 10-year ruble denominated notes? Almost certainly not. The increase that you've seen in the gold price in the absence of any retail buying in Western Europe and North America is testimony to the fact that global central banks, reacting to the weaponization of the US dollar and not trusting each other on Monday to fulfill their obligations on Tuesday, are seeing that they have no alternative but to increase their gold holdings, both as a store of value and as a medium of exchange.
And one more thing in this macro environment of geopolitics and finance is the emergence of central bank digital currencies as perhaps what the next type of currency will be. And there's a question here: if we invest in gold and silver as for protection of our assets, and then the dollar potentially crashes or CBDCs are indeed implemented, how does that work then when we need to cash out gold or silver to actually purchase things using dollars or whatever's next? Our assets may be protected from hyperinflation, but if dollars are still the currency in use, or CBDCs, then aren't we still subject to the same pressures?
If they succeed in establishing central bank digital currencies, then there's no saving us. At least there's no saving us in a formal market. Then the people who bought large quantities of junk silver will have their revenge. You, in that circumstance, won't be able to use a kilo bar because you won't be able to make change. The combination of a central bank digital currency with the social credit technology that the Chinese are employing today means that if the federal government didn't like the way that we spoke in an interview, or didn't like the drugs that we either bought or didn't buy, that they could in fact cancel our currency. And this is truly scary. Mercifully, and this will get us some more hate in the comment section, there are 400 million guns in private circulation in the United States. And I don't think in the near term that Congress has the courage to do a wealth transfer of the order of magnitude that would be suggested by a central bank digital currency. I'm taking no chances, as a matter of fact. When I go into a restaurant and tip a waiter or a waitress, I tip them in cash. And I tell them, this is not a tip, which is taxable. This is a gift, which is non-taxable. You should report this if you believe that the level of service that you get from the government exceeds the price that you pay for it in tax. Otherwise, you should regard this as a gift. I spend cash at small businesses because I want small businesses to understand the importance of tax and cash in their business. In other words, I'm actively engaged as a propagandist by my own action against central bank digital currencies and laterally taxation.
Speaking of hate mail here and freedom of speech, I've got to ask you, as a Washington resident, and you can decline to answer if you choose, there's a Washington state bill, SB 5427, which is expected to be signed by the governor shortly, set to create a statewide bias response teams with law enforcement powers and a bonus of up to $2,000 per report for people who report people who have bias against them based on protected identity categories. Are you have any concern about free speech in Washington state in the imminent face of this thing that may be going from a bill into a law that maybe it's not just what you do, it's what you might think or say if someone says you have bias against them?
They have my address, and I expect a knock. Governor Grimsley, my name for Governor Inslee, is a special kind of moron. He couldn't get an income tax past the Washington state voters. And so he's proposed an excise tax on income. He reminds me a lot of Governor Gruesome in California, who, finding every other way to deprive the state, has decided to have a wealth tax now. These people are very consistent. If it fails, subsidize it. If it succeeds, tax it. They're a particularly despicable breed. And they're, I think, however, at the eclipse, at the pinnacle of their power. What you find in all aspects of the world, in investing, in health, and everything else, there's reversion to mean, and there are counter trends. And I suspect that the incredible popularity of Mr. Trump, who many of us find to be a reprehensible human being, is the beginnings of the groundswell of a response to the incredible acquisition of power that the progressives have enjoyed for the last 20 years. I'm very nervous about the direction that this rebound might take, but I'm fairly confident that it will occur.
Yeah, I was equally concerned back during the Trump administration when there were people calling for suspending the Constitution temporarily so that Trump could have a free hand to clean up the swamp. And it's like, oh my goodness, is anybody listening to what they're asking for?
Anybody who read Mr. Trump's book, by the way, I don't dislike him more than I dislike Biden. Don't get me wrong. I'm anti-Trump except in the current context where I'm neutral. But anybody who read his book would feel very nervous about him as president, untrammeled by the Bill of Rights and the Constitution. I would have no interest in that.
Unfortunately, I think we've been living without a lot of our constitutional rights and protections and due process for some time under the color of law through many administrations. You mentioned a moment ago about reversion to the mean. That comes up, I think, in this next question. What happens to gold and silver stocks in the event of a stock market crash? Will they react in a contrarian way as gold does, or do they crash with the market?
They crash with the market. Gold and silver stocks are stocks. And in a market crash, the tertiary assets, the most marginal assets, decrease the most. And there is no asset in the world more marginal than a junior mining share. Stocks are stocks. I remember in the 1987 crash, gold and gold equities held up for precisely 24 hours. And then they followed the market lower. Even gold will be impacted, although gold will come back sooner. What happens in a crash is that the sell decision isn't made by the investor. It's made by the margin clerk. And the margin clerk doesn't care what you think about the relative value of your holdings are. They sell whatever has a bid to extinguish the debt to the house. Investors need to understand that in really precipitous declines, liquidity-related declines, there are no safe shelters. The investment categories that hold value recover the fastest. But in the immediate aftermath of a crash, there are no safe shelters, with the exception of cash.
This next question, I think, also has to do with both the reversion to mean as well as this east-west dichotomy that we've been seeing in terms of the flows of physical precious metals and the relative pricing on different exchanges. It says, what would it take to stop the artificial suppression of gold and silver prices? And we've talked about that in the past. There's a follow-on question by another listener. What would it take to stop the artificial suppression of gold and silver prices? And do you think it will happen in the next 2 years? Yes, Rick, I've been patient for the last 12 years.
Well, if they've been patient for the last 12 years, they've been rewarded. I look back and I began to materially increase my own holdings of gold in 1998, 2 years too quick. But if we go 2000 to 2024, we see a move in the gold price from $250 to $2,100. 8.6, 8.7% compounded a year for 24 years. I would ask investors who complain about that to give their head a shake. Gold has done precisely what I asked it to do. It's maintained my purchasing power. So when the gentleman says he's being patient, I need to say, really? What were your expectations? I'm not one of those who believes in any ongoing multi-decade manipulation. I believe that lower real and marginal gold and silver prices over 40 years had more to do with the strength of the U.S. dollar and the perception, at least, that savers were enjoying real interest yields on U.S. dollar denominated deposits than anything else. Why would you bother manipulating something that was going lower? Why would you try to suppress something that was falling of its own volition? I believe that the outlook changed in 2022 when what I believe was the real rate of inflation began to substantially exceed the yield available on U.S. dollar denominated instruments at the same time that the risk associated with those instruments increased. I note that in the period 1967 to 1972, the circumstance was the same and the market didn't care. But after 5 years, when the market did care, it cared in earnest. Now, as a follow-on with regards to manipulation, all markets are manipulated in the near term, gold being no exception. Markets as big as the LIBOR market and the U.S. Treasury market are manipulated in the very near term. And they are always manipulated in the direction that it is the easiest for the manipulators to manipulate. When gold markets begin to rise, it will be easier to manipulate those markets up, which occurred in my memory in the 1970s. For the last 40 years, the easy way to manipulate them is down. When you have a market, and I think we've talked about this before, Dunnigan, where the futures market is so much larger than the physical market, the temptation to short-term manipulation is particularly intense. It is not uncommon for the silver futures markets to trade 200 times the volume of silver available for good delivery in a day. So a manipulator could establish a short ladder if he or she expected the silver price to be more likely to decline, a short ladder involving $1 billion or $1.5 billion in stages from 3 months out to 2 years, and then borrow a fair amount of physical, which they dumped in the overnight market when the volumes were the least and where the damage they could do was the most, and then enjoy the change that they had affected in the spot market and its outsized impact in the futures market. And I think that happens probably on a quarterly basis. There's no other explanation for very large selling of gold and silver in the overnight markets when the volumes are the skinniest. A rational seller would be trying to maximize his or her yield on sale. In this particular instance, whoever the seller is trying to maximize their impact in the futures market. I would suggest that this is not the Trilateral Commission or the International Jewish Conspiracy or the Fed. I would suspect that these are organized cabals around the trading desks of major international banks, the same people who manipulated the Treasury market, the same people who manipulated the LIBOR market, the same people who manipulated the euro-dollar market.
We've been talking about, there's one more type of government intrusion we haven't talked about in this interview, and that's about potential for confiscation, seizure, its nationalization, etc. Other channels have also been reporting recently about Switzerland agreeing to confiscate Russian assets. What does Rick think about storing metals in vaults in a financial meltdown? Is there a risk of confiscation in Switzerland? Are private vaults safe, etc.?
I think it depends on the vault. I think a bigger risk that people face in a bull market, a bigger risk than confiscation, is entrusting gold and silver to marginal vaults. If you're going to put money in a vault, make sure that the vault is controlled by a public company where you can see their balance sheet and their income statement. Make sure that the vault is subject to an outside audit every 90 days. It is so easy for the government to steal from you via taxation, via regulation, via inflation. via quantitative easing that they have no need to steal your bullion. A tax increase or an excise tax or printing up $2 trillion out of thin air is a kind of theft which is absolutely legal and, by the way, is always applauded by the voters. Why would Congress subject themselves to the ire of a populace that has 400 million guns in private holdings when they could steal much more very easily in a way that's very popular with the voters?
We didn't mention we've been talking a lot about precious metals and financial markets. You also specialize in all natural resources, including uranium, water, et cetera. There's questions on both of those. This question is, will the U.S. government sanction nuclear fuel from Russia? They seem to be avoiding it. Are we ramping up alternatives from North America? And how would this affect Comico and other local uranium providers?
Too many people still believe that their government isn't a fraud. The sanctions that we had in place took place over a period of time when the American imports of Russian uranium doubled. And so we're trying to have sanctions where nobody, at least no voter, gets hurt. But the truth is that sanctions would be fruitless anyway. If we prohibited the import of Russian uranium, the Russians would sell it to the Chinese, and they'd sell it to the Indians. And then Australian and Canadian uranium that went to China and India would be diverted to the United States. This is all theater. Putin versus Biden is for the consumption of Russian and American voters. Nothing more. Now, it makes sense that with increasing demand for uranium, that there be increasing capacity around the re-enrichment and enrichment of uranium. There was a political consensus in the 1990s that blending down Russian and American weapons-grade uranium to fuel, which was a very good thing, by the way, would include an increase in Russian capacity for enrichment and re-enrichment, and the tacit agreement that the United States would rely on Russian capacity to do that. We've now learned that perhaps that wasn't such a wise idea, and it's likely that enrichment and re-enrichment capacity will be built outside of Russia. But assuming it isn't, what you would see is that fuel that the Russians couldn't sell in Western Europe and the United States would be diverted to emerging markets, and the fuel that they now consume from primary exports in Kazakhstan, Australia, and Canada would go to fulfill that demand, an enormous non-issue.
Another one that's opaque to most people is about water. You've talked to us about it a couple times in the past. This questioner asks, how do we invest in water for the very long run?
Almost impossible. I was able to do it in the 80s and 90s by buying private water rights when they were abundant and easy to buy, particularly in California and Texas. What happens is that most of the private water rights that were available to be sold have been sold. And they're not going to come on the market until the death of people like me or periods of very high water prices. There are a couple of agricultural companies that have control of large water rights. They are, and this is a horrible pun, despite the fact that their water stock's very illiquid. One is J.G. Boswell, the largest grower of tomatoes and cotton in California, and the holders of truly spectacular, although undescribed, water rights. The other is a small grower and real estate developer in Santa Paula, California, called Limonera. I would caution people listening to this that the primary driver of the market capitalization of both companies are actually crop yields and real estate rather than water, and need to own these for the very, very long term. I have in both cases. I would also caution people that these stocks are extremely illiquid, and so don't rush into them. If you want to buy them, study them first and use good till cancel limit orders.
For people who aren't familiar with that, good till cancel limit orders mean you actually make your bid below the current market price, hoping that there will come along a day where you'll snag some shares because there's a dip in price that you'll pick up because your price limit will be hit. All right. Rick, you've also got upcoming, in addition to your free Rural education, Rural classroom, you've also got some intensive training available, one in the form of a boot camp about exploration in project generator companies. The other is the flagship Rule Symposium on Natural Resource Investing in Boca Raton, Florida. Can you give us a quick rundown on what the first one up is the boot camp?
Yeah, I'm really excited about this. The boot camp covers exploration because that's what our attendees have asked us to cover. And the single most attractive area of exploration, at least statistically, which is prospect generation. We have a great keynote speaker, Dr. Steve Enders, a professor at the Colorado School of Mines, but also former head of worldwide exploration for Phelps Dodge, and then former head of worldwide exploration for Newmont. Somebody who knows the exploration business, both from being the chairman of junior mining companies, but also, more importantly, for being in charge of joint ventures for great multinational mining companies. There is nobody who knows more about prospect generation than Steve Enders. Of course, we'll have 4 great prospect generator exhibitors, ones that are owned personally on my own account. And we will have other discussions around that from other ranking experts. Like every other boot camp, this will be between 8 and 8.5 hours. You attend it at home on your phone or on your computer, but you have access to the recordings of the boot camp for a whole year, and you'll need them. We'll give you more information in 8 hours than you can absorb in 8 hours. Like all of our other boot camps, by the way, absolute gold-plated money-back guarantee. If you don't feel you got your money's worth, email me, and I will absolutely, positively give you your money's worth. The reason we do this is because the content is so good. This money-back guarantee goes back 30 years, and we've had to refund about 0.1% of the tuitions that we've charged. Nonetheless, absolute money-back guarantee, the financial risk is all mine.
And also in July, you've got the upcoming flagship Rules Symposium on Natural Resource Investing in Boca Raton. We were there last year and the year before and got to see you and all your exhibitors. Why is that such a big deal for people who are trying to benefit from your decades of experience and research into these companies?
I suspect, first of all, because we've been doing it for 30 years. And if you've done something successfully for 30 years, 2 things happen. You learn how to do it. And the fact that you've been able to do it successfully so long suggests to people that you deliver value for money. So how do we do it? Wonderful, big picture, macroeconomic thinkers. The Jim Rickards of the world, a Wall Street attorney from the belly of the beast. Nomi Prinz, similarly from inside Wall Street, from Goldman Sachs, who can tell you the real extent of sin in the financial service industry. Daniela DiMartino Booth, who worked for the Fed. Who better to talk about the Fed than somebody from the belly of the beast? Grant Williams, Doug Casey, Bill Bonner. People who give you a big picture point of view of the world as it is, not the way President Biden and CNBC wishes it were. Once we've done that, once we've conditioned you to a world as it exists, then we expose you to analysts and portfolio managers who've been managing money and natural resources for 30 years or 40 years, not Wall Street hacks who got dropped down into the gold business because they failed as supermarket analysts, but rather people who have existed in the real world of resources for 3 or 4 decades. Importantly, too, we have the living legends, a group of men and women who have built multi-billion-dollar mining and oil and gas companies from scratch, telling you how they did it, and telling you, importantly, what lessons they learned doing it, how they've employed those lessons to become better investors, and how you can become a better investor, too. Finally, our exhibitors. Our attendees have told us that our exhibitors aren't just advertisers, they're content too. The consequence of that is that we vet our exhibitors. Every public company at the conference will be a company that is owned in accounts managed and or owned by myself. That doesn't sadly guarantee that every stock I buy goes up. What it does guarantee is that every exhibitor has been vetted. At every other investment conference I know, the qualification to be an exhibitor is simply a check that cashes. Similarly, every bullion company that exhibits has to be a bullion company that Battle Bank is willing to do business with, which is to say a bullion company that has existed in a market without me getting any complaints about their service and credibility. Again, the exhibitors are vetted. You won't find this in any other investment conference that I'm familiar with. Once again, you can attend this conference in person, which I would prefer. There's a lot of communication that takes place in a conference that doesn't get recorded on a tape. Things like following the best investors in the world around the exhibit floor and seeing who they stop to and listening to the questions they ask. But if you can't attend in person, you can attend via live stream in the comfort of your own home. In either case, you'll have access to the recordings of the conference for a year after the conference. And once again, you'll need it because we're going to give you more information in 4 days than you can consume in 4 days. Once again, too, irrespective of whether you attend in person, which I would prefer, or live stream, which you might prefer, there's an absolute gold-plated money-back guarantee. If you don't feel that I've earned your tuition, you won't pay a tuition. The financial risk, once again, is all mine.
And everyone, if you look in the description of this video, you'll find 2 links. One is to the upcoming Bootcamp, April 20th. That's the 100% virtual and online bootcamp on exploration stage and prospect generator companies. And you'll see a second link to the Rule Symposium on Natural Resource Investing. That's the in-person or virtual, your choice is yours, event coming up in July in Boca Raton, Florida. Rick, in addition to those events, you often extend an invitation to our viewers to tap your brain for free. And would you like to do that again this time?
Absolutely. Picking my brain requires a small fork, but if you want to do it, go to ruleinvestmentmedia.com. List the natural resource stocks in your portfolio. Once again, please no tech stocks. Please no pot stocks. Please no crypto. Natural resource stocks only. I'll rank them absolutely free 1 to 10, 1 being best, 10 being worst. I'll comment on individual issues if my comments have any value. After you've done that, go to the Rule Classroom. We've got 200 hours of instructional programming, absolutely free, teaching you how to be a better natural resource investor. Invest in yourself before you drop your money in the market. Finally, if you're uncomfortable with your current banking relationships for any reason, many people know I'm starting a new bank called Battle Bank. Go to battlebank.com or in the question and comment section at Rule Investment Media, write down bank. Think of a bank that pays you interest on your checking. Think of a bank that doesn't have a multiplicity of fraudulent products. Think of a bank that's willing to lend you money against your gold. And then you will have thought of Battle Bank. If for whatever reason you're uncomfortable with your current bank, check out Battle Bank.
And folks, one last thing. If you don't want to miss a single interview with Rick or any of our other guests, make sure that you go to libertyandfinance.com. Just put your email address, click submit. You'll get 1 confirming email. After that, you're opted in, and you'll get 1 email in your inbox every day with our latest interviews, including all of Rick's interviews. And any of the description of those interviews will have the links to the special offers that Rick has offered. So Rick, as always, on behalf of all of our viewers, thank you for fielding so many of the viewers' questions in rapid fire succession today. And thank you for joining us on Liberty and Finance.
Thanks for the opportunity. I hope I see you in Boca Raton, Florida. So we'll see everyone there, I hope.
Excellent. Thank you, Rick.
Thank you.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for March 11th through March 18th, 2024, while supplies last. First, we feature 90% junk silver mixed dimes and quarters at just $1.99 over spot. We also have AU pre-1933 Gold Liberty at $65 over a 1-ounce spot. And finally, we're offering our choice 1-ounce Palladium bars at just $119 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.